Welcome to One Park Luxury Condominiums. We're hosting a roundtable series, Road to Your Dream Home. This is episode 2, and we'll be looking at interest rates and mortgages. I'm Jeff Amengual. I'll be your moderator today. I'm from DMG Investments. I'm Chief Operating Officer. Joining us today is James Chu, who is the Mortgage Sales Manager for U.S. Bank. We also have with us Taryn Byron, Associate Broker from Nest Seekers, and Marc Brenner, Broker Partner from Nest Seekers. Welcome. My experience is at GMG, it's 40 years of construction and real estate within the private real estate market space. I've been working throughout the United States, specifically in the Northeast, New York City, New Jersey, and other areas as well. With us is Marc Brenner, and Marc can speak about his experience.
Hey, Jeff, I appreciate you having me on. It's great to be here. And just a little about myself. I'm a broker partner with Nest Seekers, New Jersey. I've been doing real estate for 19 years now, leader of Nest Seekers, New Jersey New Development Division, along with the sales director at One Park Condominiums.
Joining Marc today is Taryn Byron. Taryn, can you tell us about yourself as well?
Sure thing. I am also a broker associate at Nest Seekers and work alongside Marc as sales director at One Park. And the two of us head up new developments in New Jersey for Nest Seekers International. And I have about 17 years experience in the industry.
And we're happy to have as our guest today, James Chu, who's a mortgage sales manager for U.S. Bank.
Well, thank you, Jeff. Thank you, Jeff, for having me on the call today. And it's really my pleasure to kind of speak about. But I have 26 years of experience in the business, and right now I actually in 2019 I'm a recipient of the U.S. Bank Legend Impossible. I'm a mortgage sales manager for U.S. Bank.
Thank you, James. So today we're going to talk about interest rates and mortgages. A little bit about One Park. One Park is a premier luxury condominium located in Bergen County's Cliffside Park. It's a 14-story building with over 204 upscale units featuring expansive views of New York City and Hudson River skyline, as well as phenomenal amenities. Swimming pool, full-size gym, indoor and outdoor, luxury screening areas, pool tables, you name it, we have it. So the topic today is interest rates and mortgages. So what points should a buyer be aware of when purchasing a new home during the COVID-19 pandemic? And this is a challenge that we all face today. Current market conditions, interest rate environment, new home purchasing preparation, purchase as an investment property, and purchasing at One Park condominiums are all topics that we're going to review today. So James, where do we see current interest rates at the moment?
Well, it's been very interesting, Jeff. It's been a up and down roller coaster ride in terms of interest rate. It's since COVID-19, rate has spiked up and rate had dropped just because the market, because of the current market condition in terms of what's going on with the financial crisis, and rate has been kind of somewhat level off a little bit recently. Rates are still at the lowest right now in terms of our portfolio jumbo 30-year fixed rate. We're still running between 3.375 to 3.625, depending on each particular situation. On the conforming side, loans below 510,400, 30-year fixed rate is low as 3.125 to 3.25%, depending on FICO score and loan to value. So the rate has been, during the COVID-19, what's happening is the market has kind of trended off a little bit in terms of the buyer for the mortgage-backed security. So when that happens, there's no buyer pool. So basically rate has spiked up temporarily in probably middle of March. Since middle of March, rate has actually kind of settled down a little bit because of the current environment. The Fed had done tremendous amount of work in infusing funds into the mortgage-backed security market. And now rates is actually, believe it or not, on the conforming side, it is all-time low right now.
So, Mark, Taryn, and James as well, in light of the current interest rate environment, is it a good time to purchase at One Park?
Well,
Of
for me,
course.
Jeff-
And
know-
I think to James's point, there's something that's very important. We talk about, since COVID-19, and we're talking about a very small period of time. So we're talking about essentially a 6-week to 8-week period, wherein if you look just over trends in interest rates, we're at historic lows overall, where interest rates are lower. And while we might talk about a spike in an interest rate, we're still looking at numbers that have a 3 in front of them, which is pretty incredible. It's not a situation where we're talking about interest rates on a loan where you're at 5% or 6%, which are still very, very competitive low rates. So these rates that are available for buyers right now are just absolutely incredible.
I'm going to give a good example why is it a great time to purchase at One Park right now. It is a great example because if you look at interest rate, taking the $1 million mortgage amount, at today's rate, at 3.5%, the monthly payment is probably about $44.90 per month on the principal and interest. And at a $1 million mortgage, if the rate goes up 0.5%, okay, the payment will go up to about $47.74 per month. That's $283 difference between 0.5% interest rate. 0.5% interest rate is actually, it's easy to move up. Matter of fact, just about 6 months ago, we were at the 4% rate. So when you talk about buying power, the difference of 0.5% interest rate, that's $63,000 of mortgage buying power that a consumer could have today. And that is a huge difference in buying power. It is a great time to purchase right now.
That's amazing facts, James. And also, in light of everything that's going on, at One Park has all the bells and whistles that a new home buyer is looking for. So we all know we're keeping very conscious about being clean. And at One Park, all our homes are brand new and no one's ever lived in them. They all have amazing outdoor space, and the amenities and finishes are of a 5-star hotel. So there's a lot of value to be had, along with taking advantage of interest rates being so low.
James, what programs are available at U.S. Bank for the interested buyer?
Oh, the programs, one of the things that's interesting with COVID-19 is the landscape of mortgage has changed tremendously in the last 2 months since this whole epidemic occurred. One of the issues that we have is, there are changes in guidelines every single day. However, U.S. Bank, we've been pretty fortunate that our guidelines are changed, but it hasn't changed as much. We're still able to purchase, to do a mortgage up to $900,000 mortgage amount with as little as 10% down on your jumbo. On the conforming, you still could go 5%. There's no change on that. Matter of fact, on the conforming side, you could go to 97. That's for a mortgage loan under $510,400. You could go as little as 5% down payment. So in terms of program, by the way, there's changes, but financing is still available at U.S. Bank. And we're very proud to say that, we're committed to the market, especially doing these changes. I mean, in fact, at this time, I'm kind of very proud to work for such a big bank that is able to kind of absorb these changes, because not every single lender out there is pretty much keeping the same. We could go up to $2 million with 20% down. Some lender had pulled away from that. So we're very fortunate. We got great programs, great rates. So the program is definitely available in terms of financing at One Park.
Taryn, what is the down payment need to make a purchase at One Park?
Well, a lot of it varies on what a buyer can be approved for through their lender. And as to James' point just now, all depends on where you fall within what you're purchasing. A U.S. bank can provide financing to a buyer with as little as 5% down, and then 10%. We typically require 20%, and that down payment is structured wherein a buyer would put 10% down after conclusion of attorney review, and then the remaining 10% would be due at the closing table. This helps a buyer avoid something called PMI, but we can work within the confines, and as long as someone is approved for a certain program through a lender, we're happy to work with them and be flexible to make a deal happen with a buyer and get them into their dream home at One Park.
Excellent. And James, what kind of documentation is needed to obtain a mortgage?
Well, that's actually a very important question for today, actually. Down payment, in terms of preparation, make sure that you have first of all, for a person to obtain a mortgage, they have to have a job. They can't be in furlough. They have to have a job. So, in preparation, we got to provide basically a W-2, pay stub, bank statement, your standard documentation. However, because of COVID-19, consumer need to understand a little bit what's going on and why bank have to make sure that prior to closing, for instance, 5 days prior to closing, we have to do a verification of employment just to make sure the bar is still working at the time. Just because every day it's different. And again, the investors are requiring us to do this. So we need the consumer to be prepared that we are going to ask for additional documentation to confirm that they are, in the past, we could have pay stub 60 days out without any issue. Now we have to have a pay stub within 30 days of the closing. So these are the changes that occur because of COVID-19. So I need the consumer to be prepared for that. And they have to understand that, in challenging times like this, documentation is key.
Many consumers may not realize that One Park is an excellent opportunity for investment. Marc, what would be the down payment requirement to purchase a unit as an investment property?
So for an investment property at One Park, it would be a 25% down payment, and it would be a 25% down payment. Is that correct, James?
Yeah, pretty much. It depends on what banks are. Banks typically on investment property, we like to see 25% down. That has not changed. We still require 25% down payment for the purpose of investment property. If the loan is a conforming loan, less a requirement. But in terms of the majority of the units that are One Park, in terms of the higher loan limit, that's going to go into your portfolio. So that's going to require your 25% down payment for investment property. So investment property financing is still available. We are seeing people buying investments today. It's a great opportunity because of low interest rate and because right now, a lot of people moving the money out of the market and buying something solid that is in real estate. And that's always the trend in history. So when the market doesn't do well, people kind of look for something a little bit more solid to invest in.
James, that leads us to the next question. Is there a difference between the interest rate for someone who's purchasing an investment property as opposed to, a unit to live in?
There is. The rates is typically about 0.5%, depending on their credit score, FICO, and everything else. The programs, the rates typically about 0.5% different from your owner-occupied rate. So today, on a jumbo 30-year fixed owner-occupied, you're looking at 3.5%, depending on credit score, LTV. On an investment property, you're probably looking closer to 4%.
And Marc and Taryn, what are the benefits of buying an investment property?
Well, to James's point a little bit earlier, I'm sure everyone's aware that the stock market had a bit of volatility, I'll call it, when we kind of embarked on this pandemic coming to the United States. However, real estate, on the other hand, when you start looking at real estate, I like to say when we're dealing with the stock market, it's about kind of timing the market. But with real estate, it's about time in the market. So if you look historically, real estate values over the past 10 years have increased, and even looking year over year trends from what the valuation of a 2-bed, 2-bath condo in the area was versus what it is today, those numbers have increased. And fortunately for us, with the location of One Park, we are in an amazing area, and we have such an insulated market that even when we had the big real estate crash, it did not affect our area in the same way that it did kind of the Midwest or Florida and other areas that are not in a major metropolitan hub. So investment property, especially at One Park, is strong and really a great option if that's something that you're looking as an alternative to the stock market.
So this is open to the panel. Obviously, we are faced with the pandemic, COVID-19. So what should the buyer be aware of when preparing to make a purchase at One Park during this pandemic?
Wash your hands before you come to the building. We are still doing in-person showings. We have a really great way that we've kind of touched on last week that we've been working through showings. But first and foremost, before even stepping foot out the door, you want to call James and talk to him and get an idea of what your pocketbook can afford and understand your purchasing power, because that's going to help us in this process so we know which homes will fit your budget and the level of comfort that you have on what you're going to be spending in terms of down payment and your overall monthly payment.
And on the mortgage end, it's just the documentation. Just make sure you have all your documentation prepared. Make sure you have everything up front. Make sure you have everything up to date. Again, up to date in terms of your bank statement prepared, your pay stub prepared, most current pay stub prepared. And just be prepared that you're going to need to provide documentation during the process, just because there are re-verification that are involved.
So James, what are the differences between making a purchase at One Park as an owner-occupied unit, a second home, or as an investment occupancy?
So owner-occupied property and second home rates are the same. As I mentioned earlier, the investment property, the rate is going to be higher because, again, it all has to do with the risk factor. But owner-occupied and second home rates exactly the same thing. So again, somebody who's looking to purchase a beautiful property overlooking New York City at One Park, it is a great time to purchase a second home too. So again, the interest rate is no different. You are all-time low. It is a great time to purchase a second home if you're looking to buy the property and to be closer to the city.
So what does the virtual closing look like? I mean, I understand that, we can't always do closings in person right now. There are obviously constraints. How does that happen? How does that work?
So at US Bank, we actually had this project looking to roll out in about 9 to 12 months from now. But because of what's going on with COVID-19, because of what's going on in the environment, we actually sped it up. We actually had our first virtual closing yesterday, actually. It was pretty interesting. The virtual closing is basically somebody purchased, basically signed all documentation virtually. They could basically review all the documentation up front, and in front of a notary or a settlement agent, they'll be able to sign off on the documentation. And that's happening every single day right now. New Jersey had passed a law to allow that in the last 2 weeks. So banks are really kind of jumping in and taking advantage of the situation and really, kind of making the transaction to occur a lot easier. Again, everybody's concerned about, meeting, sitting down for closing. And also appraisal. I want to make sure I bring up a little bit on appraisal. On a purchase transaction, banks, investors are actually allow if you wouldn't have this issue for one park, but they do allow for exterior inspection. So, the banks are kind of really, really adapting to what's going on. Investors are allowing to basically allowing to cope with what's going on with the environment today.
So I got a question that was placed in the chat room, and it says, with the pandemic, one of the concerns people have is that the market is still heading down, and it might be a good time to wait. What's your thoughts on this?
Well, I know the conditions going into the pandemic were a little hectic. We were having 18 to 20 tours on a weekend, which is a bit heavy on the traffic, I'm not going to lie. And in the first quarter, we broke all sales records previously at one park for the number of units that were under contract, and then kind of came to a bit of a halt. One of the exciting things is that virtual tours that we have at one park are averaging over 70 virtual tours a day. And in this past week, we had 3 homes that went under contract. So even with a stay-at-home order in place, we are still selling at one park. There are still people out there buying. In terms of whether the market will soften and go down, I'm not sure that that is going to be the case. I think it may be the complete opposite, and we might just have a bit of a feeding frenzy on our hands. We have a lot of people at home looking at property that are not happy with what they have now and have a bit of cabin fever. We have a favorable interest rate environment, and it's just an amazing time of year. Hopefully this is all over and done with before the summer comes to an end, and it's a great time for people to go out, shop for new homes, get into a new home before the holidays, and enjoy a beautiful new construction home with tons of amenities at one park.
I think to James's point, you have a lot more buying power right now. So maybe you were only capable of buying in the 600s or 700s, but now due to the interest rates being so much lower, you can buy more of the home of your dreams and grow into it, as opposed growing out of a home and then wanting to upgrade down the road. So I feel like it's a real advantage right now, and it's an amazing place to be.
This question always come up in a market that is, of what we have. I could tell you, I've been in new construction condo for a long time. I had wished that I had purchased condos when I thought that the price was going to continue to go lower. Unfortunately, you just don't know when the market is going to shift, when it's going to change. At the end of the day, you got to look at the opportunity and what's going on. With low interest rate, definitely, and we have had more transaction in April. Matter of fact, my group at US Bank have broken our record. We basically roll over $54 million in applications. 50% were purchases. And, when people says that nothing's happening, we have buyers that are actually still going on the contract right now. So the market is still moving. Do we get hit a little bit? I don't see it. I mean, right now, we're still in the spring market. People actually are still out there looking. Homes are still going on the market. So again, to predict that to wait, you're probably saying to yourself that, when's the bottom, when's the low? But the bottom line is, if you don't pay on the price, you're going to pay on the rate, right? Because when all this settle, everybody's going to predict the rate's going to go back up again. Is it going to go up tomorrow? Is it going to go up a year from now? Nobody knows. I can't predict that. Nobody can forecast that. So I would recommend that if you look at the opportunity and look at what you're able to purchase right now, look at the numbers, and make a decision from there.
Thanks, James. We have another question from Liz Singh, and she asks, can the panel talk a little bit about mortgage and tax returns? Probably something that James might be able to answer for us.
Sure. Well, tax return is very important because we do review tax return for the purpose of if a borrower is looking in terms of the borrower's capability, in terms of their write-offs. That's the reason why we do review tax returns. If you're self-employed, we require 2 years of tax return. If you're straight W-2 and pay stub, we'll probably only require your W-2 and pay stub. But when you're self-employed individual, we do need 2 years of tax return. We do average a 2-year history. So self-employment is a little bit tricky, right? So we have 2 years tax return, but we do need a year-to-date P&L to see what's going on. And especially with a lot of business that are closed and everything else, we have to review that in terms of underwriting. We have to basically make sure that the cash flow is still happening for the business. If the cash flow is not happening for the business, we do have to look into that and basically average based off the year-to-date. So tax return-wise for self-employed borrower, that is something that, we are keeping a close on it. It is changing, but right now, hopefully we can all get back to business soon. And, we're just, again, we're dealing with the changes right now.
So to wrap things up, I guess we can say that despite the difficulties presented by COVID-19 and the necessity of doing virtual showings or virtual closings, taking advantage of relatively low interest rates and an excellent product at One Park where the amenities are outstanding, now it's probably the right time to move into a brand new home. So we're going to conclude today.
I couldn't agree more, Jay.
This is episode 2. Yes. So we're going to conclude today live from One Park. This is episode 2, interest rates and mortgages. Please return for our next episode in a week's time. In the interim, if you can go to our website, One Park Condos, New Jersey, or NJ rather, .com, or text us at 201-633-7600. I thank you all for your participation, and stay safe and enjoy a wonderful day.
Thank you.
Thanks.
Thank you, guys.